Hey everyone, me Kevin here. So I wanted to talk a little bit about housing because this is the first time in the last 4 years that we have seen a year-over-year increase of more than 1% of active listings with price drops. It's an inflection point, and this is sort of something that we start looking at and we say, okay, well, we've got an inflection point to the upside in price drops. Okay, we're starting to see that. That doesn't mean it's going to sustain, but it's just one of those early signs. It's like, okay, that's something to pay attention to. But see, real estate, in my opinion, is one of those things that in order to really understand what's going on in the market, you've got to look beyond larger statistics. You could use those as clues to either corroborate what you're seeing or to be sort of a weapon that says, no, what I'm seeing or feeling is wrong. But real estate, it's always local. However, national impacts like interest rates going up, 3% in a matter of 4 months will be felt in every local market. But here's some of the things that I'm seeing now. So back in January, I made a prediction that we would see excess demand in housing evaporate, but that would take time. That would probably take until the end of 2022 because you go through a cycle. First, you get interest rates that go up in January and February, and then what happens is you still have people who have their rates locked in who are closing deals in February and March. But then the people who are looking for new homes to buy in February and March, who would actually be closing in April and May, are people who say, well, I have a higher interest rate to deal with now, and rates are going up. I may as well get in now before rates go up even further. So you have this excess excitement to get in quickly, right? That's beginning to wane. First of all, the people who had low rates locked in from December and early January, that's over now. The people who are hunting in March and April, who are excited about, okay, let's get in before the housing market sees rates go up even further, they're finding places. And so now we're at this potential tipping point where the next phase of the housing market would be, well, if more sellers decide, or even a consistent amount of sellers, as in the same amount of sellers we have been seeing, decide to put their properties on the market. Even if we stay stable, if we end up with fewer buyers now who are willing to get mortgages at 6%, then you have a problem, because then you start building inventory. That is to come. So I expect inventory to actually start building in late May, June, and July. See, a lot of people who are, comment experts, the comment Karens, they leave comments saying, oh, I don't know what you're talking about, Kevin. The housing market's not slowing. There's still no homes. Right, because it happens in phases. So far, phase 1 is correct. The people who had low rates don't exist anymore. Phase 2, the people who were fearful of higher rates are disappearing. They're the ones who are like, oh no, I better get in fast because rates are going to keep going up. They're disappearing. So now we're at the next phase of people who are supposed to come in with new mortgages. And what happens when you look at those statistics? Oh no, mortgage home applications down 75%. Yeah, right, exactly. So the excess demand is being absorbed. The new buyer pool will be shrinking. And the next phase, after we start seeing that potential stagnating of inventory, is this where you start seeing increases in prices? Increases of price drops rather, right? You start seeing that here May, June, at the same time as you see that stagnating of inventory. Then what happens? And this is the problem. This generally doesn't happen until probably, I would say, if you start getting the increase in price drops now, you're not actually going to see lower selling prices for probably 2 to 3 months because it takes time, right, to actually transact in real estate. You negotiate a lower deal, you negotiate more credits because buyers have more power, deals close for lower prices, probably start seeing lower prices like June, July, August. Then all of a sudden, when you actually get media starting to report, oh my gosh, home prices have started ticking down. Even if it's just home prices are down 2% month over month, all of a sudden people go, oh no, we're at the turn. And then you get fear of sellers who, we're at the turn. Not necessarily people who are living in their homes, who are qualified. It's not like people have to sell their homes, right? But all it takes is those investors, those institutional investors who say, hey, I got a vacancy, you know what? Rather than release this, I'm gonna sell it. May as well take my attendees now. That's when you get higher inventory, lower buyers, more accelerated price drops. And this is why I believe that Q3, Q4, which is really your December to like, end of July timeframe, more like probably August, September through December, maybe even January of next year, that's going to be your potential point of pain. If inflation remains relatively high and the Fed has to continue its sort of aggressive and hawkish tone, then that pain is likely to extend into 2023. If the Fed U-turns, that's a signal for a buying opportunity in real estate. And this is what we're prepping for right now. And this is why I always talk about seriously, might consider checking out, learning everything that I know, and 13 years of knowledge of being not only a real estate agent, licensed contractor, licensed lender, real estate broker, property manager, everything I know, which you can't learn in school, get a download for in the programs on building your long-term wealth, link down below. That's really loud. Use that coupon code before May 16th because the price will have its largest price increase. We've got some big announcements coming up towards the beginning of June and in the middle of June, and so the prices have to go up before that. So take advantage of that fair heads up here. But what's fascinating to me is the amount of folks in the common geniuses who believe, oh no, the real estate market can't fall. Yes, it can, and it will. And a lot of folks say, well, my market's still getting multiple offers. Yeah, so is mine. I'm still selling properties. And with the exception of this property I put on the market on Thursday, every other property that I've listed, even as recently as 2 weeks ago, it's been multiple offers over list. But I'm already seeing the change. And this is where, when we say real estate is hyper-local, what we're really saying is real estate is a people business. And you have to understand what the people involved in the business are feeling. Let me give you an example. I put a property on the market the first week of February. This was after I sold stocks because I thought things were going to get worse. They ended up getting about 20% worse. Had I not sold stocks, I would have been down an additional $6 million. Rather than being down an additional $6 million. Right now I'm like, with some of the options trades I've made, some that have gone well, some that have gone terribly wrong, I'm probably about saved $6 million, maybe up a few $100,000. It's been a very nasty last few weeks from all of my low buys. My Tesla buys are great. They've been up, but some other ones have gone down. I took some tendies on some things like Enphase, but I didn't on things like Trade Desk, and I got a little nipped on Affirm, right? Which I'm completely out of. And Disney's totally nipped me, sucks. So, again, I'm grateful I have not lost an additional 6M. That's a big deal. And I'm grateful we're at a par place because I do feel that stocks are relatively near, I feel like this is the recession, right? This is the stock recession. We are, in my opinion, and I've said this many times, relatively near lows. Yeah, can we still extend? Can we still get more margin liquidations? Absolutely, that's gonna drive us temporarily lower, but I'm not terribly worried about that. And I don't know. I don't profess to be able to predict the stock market as well as real estate. I think real estate is a lot easier because it's slower moving, and so you can have more patience and time. You take an extra 2 weeks in the stock market, it's moved 10% sometimes, right? Real estate's a little slower in that. But again, the folks right now going, oh, we're still getting multiple offers. If you're not seeing the difference of when I first started selling real estate, February, week 1, where when I hold an open house, I've all of a sudden got a line of 50 couples. We used to do COVID disclosures. We don't actually do them anymore. COVID disclosures. And I would look through my disclosures on my iPads and I'd be like, oh my gosh, I have 50 signatures for 50 couples and families walking through my properties, not individuals, 50 forms, one per family. And I'm like, this is insane. This is crazy. This is what the peak of the market feels like. The last place I put on the market, dude, I got one phone call. And I'm like, what? The place I put on the market before that, I had 4 showings. And I underlisted that one with 4 showings. It still ended up selling for overlist. But still, the delta is so clear. It's literally playing out the way that we've been expecting with the real estate market. So far, it's been playing out as expected with the stock market, with the exception of about 10 points in the QQQ, because I really thought that 318 level was bottom. We're at about 310 right now. So I'm a little off with the target on that bottom, but that's okay. If we go to 280, then obviously I screwed up. But if we saw something like 280, personally, I really think it'd still be a buying op because it probably come as a sharp decline at market open on margin calls. I think we had a terrible week of margin calls this week. So just be careful. Be very, very careful if you're on margin. Like, get the hell out of margin. Anyway, sorry, I don't mean to turn this real estate video into stock video. Just saying, like, so far, we have expected volatility. We have expected what has been happening. Now, even though I've been expecting these things, it doesn't, again, make us perfect with every single move we make, but we do our best, right? If we can save a lot of losses and prevent a lot of losses, and we can make gains where we can, take them. Anyway, hopefully that's helpful. Now, what does that mean for my target for acquiring again? It depends on inflation. If we actually start seeing inflation peak, certainly if it hasn't already peaked in March, then within the next 6 months, is as long as we see that peak, bottom real estate wouldn't surprise me if it's somewhere between Q4 and Q2 of next year. Inflation stays hot, real estate's gonna get whacked even more. So for me, the plan is raise capital now for real estate. Don't buy now, prepare now. Speaking of which, if you want to learn more about big plans coming, make sure to drop your email, and whether you're an accredited investor or not, at metkevin.com/join. metkevin.com/join, especially if you want to be one of those people who's able to shop for real estate at the bottom of the market, not like the stupid REITs that are buying at the top of the market, okay? Anyway, thanks for watching, folks. Good luck out there. Bye.